If you underpaid your taxes, now you're subject to interest and penalties, right?
Interest certainly.
Interest,
I don't know. I don't know
penalties,
about penalties
fair enough.
necessarily, but
Interest for sure.
interest certainly, yes.
And I think it gets actually a little bit more complicated when a lot of our tax planning, I think, at least for my case, we advocated that if you're going to buy a property through your business or what have you, lend it to the corporation. The corporation goes and buys the property, and this is under the assumption that capital gains are taxed at 50% inclusion.
Right.
And now in a corporation, the law is that you don't have a threshold of up to $250,000. In fact, the entire gain is now at a 67% inclusion. So even on a smaller transaction,
Yep. Yep.
it could be potentially tens of thousands of dollars if you bought a property inside a corp. Maybe you're a small business person, you lent money to a corporation. That corporation went and bought a building at $1 million, is now worth $1.5 million.
Yep. Well, and
It's considerable.
I advocated some tax planning ahead of, I think it was June 25th, 2024, that this sort of came into force. And there was a lot of planning that was done to, step up cost basis. Some people who are listening to this right now might have spent some money in tax planning, and it might have all been for naught. So I wanted to kind of go back to a little bit of history over the last couple of years. I'm sure some of you might have heard about the underused housing tax, and I know, Matt, you're familiar with that. And
this is a little bit of PTSD for accountants.
Yeah, the Bear trustee scandal, and they couldn't have canceled these things at worse times. All the money had been spent to get these filings done, under severe penalties. Scared the tax community, scared clients, and then it was all for naught in the end. And then they did a 180. So it's. You ever hear that story of the boy who cried wolf?
Mm-hmm.
It's starting to sound like that, and it really hurts the government, because it's going to hurt future governments as well. Because whenever they want to make some changes, they're going to say this, and are we going to believe them? Because the history is bad. So now here we are at another crossroads where maybe it's going to be law, maybe it's not going to be law. So it leaves us in a very tough situation, and it's very hard to advise. So I think the answer is to talk to a good tax practitioner and get some advice as to which way you're going to go. And if you're not going to pay it at 2/3, then you better have a discussion and understand the risks. If you're going to do it at 50%, so if you're going to do that at 50% and not do the 2/3, you really need to understand what you're walking into. Likewise, if you do the 2/3 and then this doesn't become law, to Matt's point earlier, you're still going to have to go back and amend your tax return. So it might be you're kind of screwed if you do and you're screwed if you don't, because depending on which way it goes, you may have additional accounting fees to deal with this in complexity.